Good evening, everybody. This is Michael Filighera with logicalsignals.com and bringing you the Elliott wave update for the NASDAQ 100, the NQ, for Tuesday, February 23rd, 2021. I'm going to begin with the hourly chart. Quickly recap, we are pretty much still feeling that the recent high of a week ago at 13,900.50 was the top for now. And we've been in the process of counting an intermediate level 5-wave decline. That was put into place today at the first hour's lows on during US trading this morning. We saw the market put in a low down at 12,757.25. And so that labeling now is in place. So that finished a minor wave 5, which finished the intermediate wave 5. And now this is going to be the point that we can maybe have to change what primary level wave that completed. Right now, I'm putting as primary wave 1 of a cycle level wave A decline. So it's going to be the first wave of the cycle level correction that we're looking to unfold. If indeed that A wave is going to take the shape of 5 waves, so it'll be a decline of 5 larger primary level waves, then we would then be looking for a 2, 3, 4, 5. If indeed this is the A, it could be telling us that we're going to get a 3-wave rally, which is what we believe was underway now, followed by an additional 5-wave decline. And that may be an ABC down, which could then complete the cycle wave A. So we've still got those two possibilities in play for the overall larger cycle wave A. And yes, it would affect the depth and it would affect how far these individual declines would go. So that's why we're just going to continue to track it and trade what's given to us each day. Okay, so what we're looking for now is either a wave 2 bounce or a wave B bounce. Both would come in the shape of an ABC. So it's just a larger 3-wave pattern. I'm going to go down to the charts that I used to trade during the day so that we can see the internals of, from that low, what has been showing up for us. And thus far, it can be counted as a 5-wave structure up, or it could be an ABC up, completing at this evening's high, actually during the Globex section thus far, of 13,256. And if that completed, then we'd really be looking for a much stronger decline to pick up. So I am allowing for a continued rally because ultimately oops, come on, don't go that way, go this way. Oh boy, this happens to me all the time, doesn't it? In any case, sorry, that the market has to be able to, or we have to allow for the possibility that the market's going to continue to move higher and into higher Fibonacci levels. See, right now we're sitting basically just below 382. That's a common area for it to conclude this particular portion, pull back, and if it's indeed going to rally some more, then we'd be looking for it to come up to this level. Now this particular wave, a wave 2 or a B wave, could seriously go to 618 of the initial decline. And that would put it at 13,464. So there has potential yet to the upside. We cannot discount that. And so we have our points that if the market begins to break it above, which in this case on an hourly basis would be a clean break above the 50-day moving average. If it breaks that, then we have that resistance at 13,329, we'll call it. And that we're either going to cause a pause, an initial pullback, or it's going to contain the move and turn the market into the next segment that we'd be looking for. For the type of wave, I actually am looking over the next day, maybe two, that we're going to end up back here. Lately, though, I will say, because of the intensity to sell, the market has not been spending a lot of time fooling around. It seems that the sellers move right back in and take advantage of prices and just take care of business. So those are the levels that are going to look for the upside. The overall structure of the pattern should remain that if this indeed is going to be 5, it'll be 3 down and then another 5 to complete that larger pattern on the hourly chart. So now we've got some parameters in terms of what we can expect, and we know now levels, because we're going to use these levels and the moving averages to dictate where we believe the market could go and how do you want to trade it. You can play the different resistance areas, see how the market acts going there. You may choose, if it breaks here, that this is where it's headed, so you can play that from the long side, right? And in the NASDAQ, you'll make good money. And then maybe be flat here. And if it goes up, comes back down, but then starts to go again, you just jump on board because this would be the next level. So we have levels, and it would fit the overall pattern in progress. So downside, if it starts to break back below the 50-day, then we're going to be looking that the market may start to accelerate because this is the last kind of moving average that's holding it within a zone. But we've got other ones pointing fairly strongly lower. Then we might want to go over and see what's happening elsewhere. If we look at the 2-minute right now, it's below all the moving averages. So now we'd be looking for it to come back up, et cetera, et cetera. So our possibilities right now that we have to leave upside room. The overall pattern on the hourly chart does tell us that. In fact, the overall pattern of all the charts tell us that we should be looking for, at least on a 15 to hourly basis, an upside move. How it unfolds, of course, we know that the market ebbs and flows. So there's the flow, there's the ebb, flow, there's the ebb. And so there are recognizable levels that it can come to. And that's how we're going to begin to trade. Today, again, was a little bit of a surprise, I have to say, that the intensity of the sell and against how I was actually viewing it, I had not stepped back and taken a look to see, oh, that completed one level up to produce the rally that we got. So the intensity of the rally kind of caught me off, and the fact that it zipped above, which at the time was resistance at 13,120, it just kind of zipped right through it, and I was not expecting. But had I stood back, then I would have redone my Fibonacci levels and seen that the market had completed and moved. So always leave open and go back out to your larger picture to make sure that it's still fitting within what you were expecting. And when it breaks that, don't be in a position that's going against you. So that was actually my stop level. And then I just stood back and got back in and did trade a little bit more. All right, I'm going to leave it there. Wish everybody a good evening, good trading. Next update will be Wednesday evening. Have a good night.